Aubrey Trades here, coming in with a weekend study update. I went back to look at some charts and review how things have been going. About a couple weeks into switching to the cash account again, taking way smaller trades but taking more of them, which has been a bit of a learning experience. Pretty much, I'd say break even. I think I've clawed myself up maybe 30-40 bucks out of the big ALYI hole that I got myself into. And I've been noticing that I tend to be really impatient and I miss a lot of the major upside on some moves, which is a bit of a problem. And I remembered in a stocks to trade video, it was mentioned using the 15-minute chart to really filter out a lot of intraday noise. And usually I had a whole host of moving averages up. You know, I would have a 30 and a 200 simple moving average. I'd have the HMA up here to see like a nice tight trend line around the candlesticks. And I liked the 200 because if things broke, like here you see you're bouncing off of the 200 a little bit and then you break the 200 and then you come back and this and that. But I was just getting caught so much, right? So I figured if I zoom out to the 15-day and get some of those other moving averages off the chart and go just straight to the HMA and VWAP, it might be a lot easier to take more of these big moves. Now, I want to take a little bit of time to explain the HMA a bit. If I go over here, the man himself, Alan Hall, wrote an article. You can check it out if you want to check it out yourself, explaining how he comes up with his moving average indicator, which is designed to cut off the lag of the moving average. Here's a simple, here's a nested, you can see the lag time, and then here you can see his, which closely follows the candlesticks. Here's a bit of math that talks about how he gets that. An example being a sample average of numbers, this being like price points 0 to 9, and creating an average of two averages. So you know that the average of 0 and 9 is 4.5, but if you have the period of the average to 5 and apply it to the most recent numbers 5, 6, 7, 8, and 9, the midpoint would be 7. And then to get the lag, take the midpoint of 7, add the difference between the two averages, which is 2.5. You get a final, and so that's 2.5 times 7 minus 4.5. You get a final answer of 9.5, which overcompensates a little bit on the most recent price, but it offsets the lagging effect of an nested average, he says. This means you just end up getting this pretty line that follows, and clearly this looked like there would be weekly candles. So one, that tells me that that HMA is probably better suited for longer time frames anyway. But on runners like this, that end up coming out of nowhere from $1 a share to 25, it's not so accurate on the dailies. I mean, I suppose you could do a little signal on 179 and here's your 192 and blah, 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 blah. But when these things go nutty, like MRIN did over here, and we go into the intraday chart, my thesis was that HMA, that whole moving average, would be a good indicator to capture the majority of these big swings in price action. And here, even looking at this, right? How clear is this dip and rip, right? Which is something that we hear a lot in pre-market prep, right? This we would have woken up pre-market prep, would have been like, okay, this was spiking huge after hours, it's holding up, and you'd be like, it's a candidate for a dip and rip. Here's your 15-minute candles. You see this opening above the HMA, but I'm not super hyped on trading the first candle of the day. And if I was tempted to take a long at the open and it did this move, right? You're stopping out when the candle goes red. You're stopping out when the candle goes red. You wait. You see this green. You see this candle going green. You could re-long, risk low a day. You could wait till it closes above the HMA at $9.45. The price of $9.45, and you could take that all the way to $13.36, right? And your sell signal would be, if you hadn't guessed it, when you close beneath the HMA. That's your sell. So if you don't get out here, which I'd be probably tempted to get out on this candle or on this candle. Once this is like, okay, we didn't post a new high here, and we're getting here, and I'm seeing we pierced, but now we're closing. That's indecision to me, right? So I'm selling here. Here's your VWAP bounce. This looks so clean on the 15-minute chart. Like, you get this doji, which on the 5 and the 1 minute charts can just be noise. You get false flags and all that sort of thing. But here, how perfect that signals this VWAP bounce. And if you don't want to buy the bounce, you buy when you're crossing the HMA again. You get the 13s to the 18s. Crazy move, right? Zooming out. And I'll do a couple charts that aren't just MRIN, but I just think like this works so well on this chart. There's the dip and rip we just talked about. To be fair, here's another day. You're closing below into the pre-market. I'm not tempted to buy. I wouldn't be jazzed on this. If I get a red candle at the open, I'm probably waiting to pierce the VWAP, or not the VWAP, the HMA. Here you could buy here at the 11s and sell in the high 11s, but I'm not really tempted to take a trade on a day on this type of chart anyway. But I want to show it just because I feel like it's a little disingenuous to just, show the days where it works really well. Here it works extremely well. Even if you wait to get over the HMA here at 1309, you can still get out at 19. How insane is that? Probably a no play once it crashes through VWAP like this for me. But you could play here's above the HMA again, right? And you could take that. You watch out for the VWAP bounce, I guess. Now you can get out here in the 1670s, and this entry would have been in the 15s. So that would have worked nicely. This was crazy. If I saw this in the pre-market, you could enter here. If you don't play pre-market, well, then this was pretty tough, right? That's one example. I want to go through another, something that's not MRIN, OPTT. Another beautiful example. You could have grabbed this at 260s and gotten out in 311s. This was tough. If you held through this, and you ended up going higher, but this would have probably faked me out. I probably would have gotten out somewhere around here once VWAP starts to fail. But, it is what it is. And you could just rebuy over here in the 280s, and you got the 320s. So there's something. Let's go to something else. Let's go to, what is penny OTC stock? Like this would have worked well for you. Coming in the 1250s, and you're in the 14s here. Or you're in the 14s by the time you get the clear sell signal, which is really just this hovering around VWAP. But whatevs. Here you get this morning dip. This is excellent, right? You can get in here if you want to be early, risk day lows. What is that? The 1370s to the 1724s. Like, that's pretty cool. Would have worked nicely. Here's another one where the dip is so perfectly. Look at this. You see the crazy volume bar. You see the indecision doji up here. 1030s, 1243. 20% bounce there, even though it doesn't look like a whole lot. Another one, clear as day. 740s to the 970s. So this is something that I'm going to try come Tuesday. I'm going to try sticking to the 15-minute charts, maybe zooming into the 5s in between, but I'm going to really make my decisions based off of these 15-minute charts, and I'm really going to just only have the VWAP up and the whole moving average. So if you got some value out of this, if you learned a little bit, if you try the HMA, reach out, let me know how it goes for you. I'm just a dude, no expert, updated my Profitly finally. Take everything I say with a grain of salt, because look at my crapshoot of a profit chart. But at the same time, I started early May, so it is what it is. Tim Grittani, best penny stock trader in the world, wasn't profitable for 9 months, so why would I expect any different for myself, right? But with all of the trades I just imported, my winning percentage did go up from about the low 30s to now 43. That's something that I'm pretty happy about. And the fact that, I did claw a little bit. Oh my goodness. I did claw a little bit. 390s, 368 now. So we're getting there. We're going to see how this new strategy works out come Tuesday. And if I have some success, I got an influx of cash coming in from my other job that I am very, very ready to load into the account. Not to trade bigger though, just to have more opportunities to trade. I am not sizing up above $100, 500 max on an OTC play, but I'm kind of burnt out on OTC plays right now, to be honest. The commissions are annoying, and to go from taking a lot of $100 trades and seeing your P&L fluctuate from like cents and early dollars to like taking 5 times that position size on an OTC just because you want to cover the commission and a 2% move is like frustrating, because then all of a sudden your fluctuations are like $10, $20. And that's a little bit more stressful. So I'm not so jazzed on the OTC plays. Maybe the gapper setups I'll keep looking out for. But right now these listed plays are doing pretty good, and I think this strategy is going to work pretty well with them. Even though I think this strategy would work pretty well on things like MJWL. Here's a random day I'm gutting into. Here's your dip. Here's your buying above the HMA and the 15.5s, and here's 18, right? I guess, this would be tricky. I guess this would be tricky. So if you don't hold through this, this is what, the 15.5s to the 16.59s. That's still a decent move. Here's a really great move. You're opening above it. Here's 18 cents to 21 cents. So, I think this works too in OTC land. I'm just a little bit more hesitant about OTC land. Here's the 18s to the 24s and the 26th the next day when you gap. That's what I'm thinking. So that's about all I got today. Thanks so much for checking it out, documenting my journey to consistent profitability, one trade, one day at a time. I'll be back on Tuesday, you bet, with another trade recap. Aubrey, out.